Although some Western countries seriously consider introducing a price cap on Russian oil, which will inevitably lead to a crude deficit, the commodity is still trading below $100 per barrel. And the uncertainty is high, and investors may simply not know what to expect and do not realize yet how serious the impact may be. Naturally, crude prices will surge if European countries introduce the price limit on Russian oil, yet it's hard to predict the scale of growth. That's why investors prefer to stay in a wait-and-see mode. What's more, Russian energy giant Gazprom has halted indefinitely the supply of gas to Europe via the Nord Stream pipeline. And today, markets are looking ahead of the OPEC Plus meeting. The members of the grouping will discuss oil output for October this year. Recently, Saudi Arabia was considering the idea of cutting production levels to support prices in case Iran adds more volumes to the market. For your reference, Western countries resumed talks with Iran regarding the nuclear deal, and it implies the lifting of the embargo on Iranian oil. And now let's look at the oil chart. Last week, bears were fully in control of the market. Thus, Brent lost 13% of its value, having hit the support level of $91.50 per barrel. Then the price pulled back to the upside from this level, and today traders have two possible scenarios. In the first case, a pullback may develop into a full-fledged correction if the price settles firmly above $96 per barrel, at least on the 4-hour chart. And the second scenario suggests the continuation of the downtrend. Consolidation below the mark of 91.5 on the 4-hour chart will serve as a confirmation. Meanwhile, gold rebounded slightly after dropping below the level of $1,700 per troy ounce. At the moment, the precious metal is trading at $1,710 per troy ounce. There are signs that the market may enter a clear-cut sideways channel. Investors will wait for the ECB meeting this Thursday, where the regulator may raise the funds rate from 0.5% to 1.25%. And this decision will put even more pressure on the gold and may push the price below $1,700 towards the target of $1,600 per troy ounce. The level of 1,780 will serve as a pivot point from where the downward movement may continue. And now let's proceed to the Russian ruble. The situation here remains unchanged, although the Western media are already speculating about foreign currency interventions by the Russian Ministry of Finance. The ministry itself has neither confirmed nor denied this fact and makes no official statements. Therefore, speculations about purchases of yuan and other currencies may have no ground. Meanwhile, market participants hesitate to act based on the rumors. Over the past few months, the Bank of Russia and the Ministry of Finance have promised twice to take some measures to weaken the ruble. Yet nothing has changed so far, and so unless there is a clear evidence, the situation on the ruble is likely to stay the same. The dollar-ruble pair is trying to develop an upward movement, but results are moderate. The quote has been hovering near the level of 60 for quite some time now, retreating from it shortly. Technical analysis confirms a sideways movement of the pair with a slight deviation of 1.5 rubles in each direction. However, this is not enough to predict its further movement. The ruble has long been dependent on the information background, so the pair needs new statements or new economic events to drive it out of the range-bound market. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.